Oliver, we are going to cover a number of questions, and we would start with a little bit about the expectation and understanding of insurers' role in society. And the first question I have for you, you have been saying that you believe that the lack of growth is a key challenge for society. How can Europe support growth? And in your view, what is growth?
It's a very good question. First, before I answer your question, thank you for being here. Thank you to our host for having me here. It's a real pleasure. And thank you to our local colleagues. We have a very fine company here in Romania, and they're doing a great job. So let me say that first. Now, to your question, by the way, we're growing here very much, and it tells you a little bit what the underlying problem is. There's a problem of mindset. Because growth typically only talks about what do the revenues do and where does that come from. And Albert Einstein once said, if you get up every morning and you do the same thing over and over again, and you get up the next morning, you think something will change, then you're mad. And I think it's very important what Andreas just said. In order to do what we need to do to grow our industry, we need to change quite a few things. And then the growth will come because society will honor better services and better products. The real issue that we have today, and I'll give you many examples, that our industry is not at the forefront of interest of our societies, and it is not at the forefront of respect of our societies. You know, when I have two kids, they're 20 and 19, they go to a list of what are the most fashionable jobs to work in. Insurance typically shows up second to last. And just before investment bankers. Yeah, so, but this is a real, we laugh about it, but it's a real issue that we have to confront. And when we are amongst ourselves, we typically like to congratulate ourselves on how great we are. And so the first thing is we have to add more value to society. We can talk about how we do that.
Yes, exactly. If your children have that view about insurance, how do you then explain to them what insurance is and what are the positive elements of insurance?
Yeah, they typically say, can you say it please in 5 minutes, not in 5 hours, so we actually get it. It starts with that. Yeah, our industry is very complicated, and if you need to explain something over 5 hours that should add value to society, you already have a challenge. So the one thing, and we do that in Allianz, is we need to be dramatically more simple in communicating the value that we deliver, and that gets you to a number of things. But at the end of the conversation, I think they're pretty proud of what we do. Good. But it's not self-evident. You know, Andreas gave you a few numbers earlier on what we do every day. It's not at the forefront of industry, and we have a few challenges. So for example, it starts with a very simple question that is very relevant for the times that we go through is, are we trusted by our communities? So when you do surveys of our clients and of various institutions, and do they say, do you trust the insurance industry? You can say we're better than the banks, but that doesn't cut it really.
No, I don't think that would work. But what is what can we do to make insurance more attractive to consumers and particularly to the regulators, to the politicians?
Yeah. So I start with an anecdote. About 25 years ago, I traveled to Scandinavia on vacation, and I saw a report that showed the customer satisfaction that Scandinavian insurers have relative to other industry. And I was flabbergasted by the fact that it's very, very high. It's very, very high. I don't know whether you know that. It's typically not what we look at. When we measure our industry, we look at revenues, we look at profits, we look at assets under management, we talk about that. But the first and the foremost number that we now need to look at is how happy are the clients with the products we provide to them. So I went in, and there are many, many aspects that I can talk about. Why this industry going through a crisis at the end of the 90s, they took that, by the way, as a wake-up call. They have totally changed the way they operate with their clients, right? So we dream in Allianz of things that in Scandinavian insurers, the better ones have, which is first call resolution of 80%. In Allianz, that's about 25, just to give you a number. So I might be overly simple, but I'm trying to do that given your question. The first and foremost question is, what do we do that our clients say, you know, working with our industry is a pleasure?
Yes. Well, what is a pleasure for the consumer? How would you define the, if you're also a consumer, now what would you expect as a consumer, the insurance industry, to do better than they do it today?
First and foremost, our products have to become a lot more simple.
I like that.
Yeah, a lot more simple. I think it's absolutely possible. I can give you many examples from our own company and how we're working on it. There's many things that we can do. The issue is we have not been invented by consumers. So it starts with the premise that regulators at the end of the 19th century foremost, bureaucrats invented our industry and said you need to have certain types of insurance. And then we created a very complicated system that we spend explaining to people, and guess what? They don't care. Yeah? Nobody cares what we do inside. Nobody cares. What they want is when they have an accident, they want to get paid. What is the number one thing that creates displeasure in the European community for its property casualty insurance? What's the number one thing? The number one thing is that people think they should get paid for a claim and we don't pay it. Because we have created these very complicated exclusions.
Yes. Is that a problem of the lawyers? Are there too many lawyers?
No,
involved?
we have too many of many things.
Okay. I think that's a very good yes.
So let me give you an example. In the home market in Germany, until last year, you needed to answer about 26 questions until you got the proper quote to get car insurance.
Yes.
Now, 26 questions. You know, think about what you do when you get on Netflix. You know, in about 2 minutes, you can register your account and then you are there. And that is forming the expectations of consumers. Now, we've moved to 11 questions. Yeah, and we're going down. And in Italy, I knew it for our motor insurance company, we need 2 data points, your name and your car plate. And we give you, with 88% accuracy, we give you a reliable quote. Now, we have different claims databases, we have different background data. Our Italian operation is one of the best in the world. But that is the benchmark. The benchmark is how do we create, and by the way, without losing the analytical engine, without losing the ability to price differentiate, without losing the ability to detect fraud. Right? So we're not trying to get rid of all our know-how by being stupid. So simple doesn't mean stupid. It just means being more intuitive for the consumer. And it sounds simple, it's very difficult to do. Steve Jobs has said the saying, you know, doing something really simple is really, really complicated.
I entirely agree, but I'm still waiting for your example on a simple insurance product.
Buy motor insurance from us in Italy. In Belgium, I think it's still very complicated.
Yes, you know why.
Yeah. Yeah, so that is the fundamental things. We can go on, and it is the same true for many other products. And we have that in our company. I wish I could point out to everybody else. We have still that in our own company. I had one of my assistants 2 weeks ago applying for a term life product, a little more complicated for various reasons, to secure a mortgage. It took about an hour and a half, despite a half-day preparation, to get the application filled in. That's ridiculous. Yeah. It's completely ridiculous.
But do you believe that it's partly caused by regulation that all these things get so complicated?
So regulation is certainly one part of it, and we're trying to do better. I very much like the point around principles versus rule-based, but it's also ourselves. Because of a simple fact, we need a reliable rule of law. The problem is with current populistic politics, but also with all due respect with what supervisors do, retrospective changes to rules. Our legal departments have become, and compliance departments, so paranoid that we are creating these 40 pages that you say you need to read and sign 15 times in order to be damn sure that in the case of a lawsuit by some consumer activists and others, we hold up. Yeah. And we're trying to do that in order to protect ourselves. In fact, we're creating less trust with the society, but because who do you trust when you say, this is a really simple product, here's 40 pages of documentation? It just doesn't work. It just doesn't work. But so we could get help from Gabriel, by the way, and others to say the fundamental principle is the rule of law and the rule of the contracts have to hold up. We cannot have it. It's also now a sport in Germany where 20 years after we wrote a contract, some court says, oh, I read the fine, I actually don't like it. Retroactively, we change. You can change for the future. We will adjust, but stop going into that. And I think it's a job for society too. But I don't want to blame the courts. I don't want to blame the regulators. We can do a lot ourselves to simplify.
That was going to be my question, because it's nice. I hear the industry wants to have a principle-based regulation. But in the end, industry wants regulation to be as a protection against the supervisors. And the supervisors want regulation as a protection against the industry. So how are you going to get out of this mess?
And then the supervisor wanted to be protected against politicians.
Well, that's the third challenge, yes.
Yeah, but why don't we, so we come now out of 10 years of capital regulation. Yes. Why don't we spend the next few years on getting more clearer rules on conduct? That is what we really have to work on together, and then to say, but we need to rely on these rules also. Then we can save a lot of cost in compliance, a lot of cost in legal, and consumers can actually get products that they know what they're getting.
Yes.
But the rules have to be stable. Society depends on the rule of law, and the courts needs to be stable, and the laws need to be stable.
As a former regulator, I can only agree with you. And let's move on to conduct and to new technologies. It's obvious that the world is changing, also in a technological way. And my question to you is, where does these technological changes will affect industry the most? Is it on the products? Is it on the way you do your business, on the underwriting? How do you see it?
It's everywhere.
It's everywhere.
It's everywhere. But in particular, as we just discussed, with the consumers, when you get outstanding service from Netflix, from Spotify, where I'm spending more of my time than on movies, and other things, your expectations for other parts of life dramatically increase in terms of what you expect, in terms of ease, in terms of cost to serve. If I have access to billions of songs for €9 a month, I'm not clear why I'm spending so much money on insurance products. And while I know that 2/3 of the cost is distribution that I hardly ever use. And this is not a criticism of any distributor, any part of the value chain. So we will be massively affected, particularly at the customer interface.
Yeah.
So everything will change. And the way we're dealing with that at the moment is pretty piecemeal.
Now, you are a big firm and you have all the staff to deal with these technological changes, but don't you think that this will also affect consolidation in the market, that smaller insurers will have more and more difficulties to work in such an environment?
I'm not so sure. We always have this debate for like 30, 40, 50 years that the big will win and the small will go away. I don't believe that's the story. The good will win, and the good can be small. And we've seen that in industry. It's not the capital or anything. It's innovation and serving clients better. We have amazing mutuals. Many of my benchmarks in the countries are local mutuals that just serve clients better than we do.
Yes.
So I don't think it's a form of capital. Just by the way, the rules have to be also fair, right? People cannot say I don't have cost of capital and I'm writing constantly at a loss, but it's a different issue. But the real point is it's not about large or small. It's about who gives better value to the consumer. And that's not driven by size necessarily. Now, let me give you an example on technology. Allianz used to have a much better IT cost ratio throughout the 80s until the middle 90s. Why? Because it was mainframe based and you had scale economies. Then the client server world came and you didn't need size. So the lower the cost is in access to technology and data, the better it is. Now the countervailing fact is also clear, particularly in retail business, that is the power of the brand. As you compete in the digital space, you need to bring clients increasingly to you, and that you can only do if you have the proper brand to support what you do. And that is very important. Therefore, I believe you're right. There will be consolidation naturally over time to the brands that can occupy the mind of the consumer. But it's more a question for the next decade and 2 decades than for the next 2 to 3 years.
And which business line will be affected most by these technological changes?
Most of the products that people need to buy, need to have, so mandatory products, MTPL will go, then Casco, and the more frequency-intensive products like health supplemental, and the lower frequency products will come later.
If I can turn to the way these products are sold on the market, it's very important. You mentioned the intermediation. It's being said that intermediaries will slowly disappear in the market and the people will buy directly from the company. Is that something that you see happening, or do you see the role?
I don't see it that simple. People are always afraid and says, better believes the agents are going to go away. I don't think so. I don't think so. People do need advice in this world more than ever. They need good advice. But when you look at what intermediaries do today, the least amount is actually spent on advice. Most of that is transactional services that duplicate what we do. Mostly in the broker space, but also with agents. And we need to focus really on advice.
Yes.
We need to focus on advice.
And do you think that it is realistically possible that advice will be given in a direct sale, or do you think that intermediaries are the best channel to give that advice?
It's a choice of the consumer. We have, and it also depends on products. When my son bought his first 25-year-old car and he has no money, everything he sort of computes is a number of cigarette packs because unfortunately he smokes, it's terrible. Then it matters a lot what the cost of intermediation is, so he buys direct. But he wants the service and he wants our brand. By the way, that's why our brand and direct is also going to be Allianz. But when you have more how do I say, disposable income, and so that's an affordability issue, but you would also need more advice because you're planning for retirement or you're protecting some of the assets that you really care for, the advice intensity goes up. So I think it's totally wrong to say, you know, there's direct clients and there is advice-oriented clients. It depends on the situation in life, the complexity of your needs, your propensity to use technology. There are many different drivers, but I don't think advice will go away. Now, we have to get dramatically more efficient, and clients expect us to price these things separately. Yeah. We always bundle these things and say, you know, pay me X% of commission regardless of whether I use it or not and whether I'm happy or not. That will go away.
Yeah. Now, if you look at the technological changes and the insurtechs and the Googles and whatever will come up in the future, do you look at that as a threat, or do you think that's a nice combination?
It's a real threat, and I'll start with some data on Germany and France, because we have uneven competition. So I don't mind anybody coming in, Amazon, whoever is welcome to come. It's called competition. We have a market economy, but we need to have the same rules. Okay. And I think politicians, with all due respect, consumers are very naive still around how the economics really work. If you provide all of your data to Google because they scan your contacts, they scan everything you do, they put on your camera without you knowing, by the way, wherever you are, then people say, I don't mind that because I can use Google Maps, I can do the search. The reality is they're auctioning your data, yeah, in a way that creates much more value to them than it creates for you. Otherwise, you couldn't explain the market cap. The real answer is that the consumer should be able to capture that value for themselves. First observation. Second observation with some facts. When you do the average of the industry, it's not how Allianz does it, and you bid for cheap auto insurance in Germany through Google, and you compute the cost to acquire a good client via Google, the total cost for the industry on average is about 95 euros. The cost to acquire a client for an average agent in Germany is 75 euros. So what does that mean? It already means that you are losing money if you are acquiring a client to Google, because they auction it in such an intelligent way that we give all the value away to the information intermediary and to the people that capture the client value. What does that mean? It's very important. You do not need to be in insurance to capture all our industry profit and take it away. And that we need to regulate. Yeah. That is what we need to regulate. We cannot say as regulators, oh, I don't see that, and it's just completely unfair. And Google, correct, you have many friends at Google said, you guys are stupid. If you're bidding so much money for the keyword, that's not my problem, it's your problem. Yeah. But you have information asymmetry. By the way, the highest margin that Google makes in the world is in France, and the second highest is in Germany. And more than 30% of the income comes from insurance, actually, and most of that from motor. So we are a massive value driver for the Google market cap. Mm-hmm. And we need to deal with that, and we need to deal with that quickly. Yes.
Now, we heard it from Andreas that he believes that regulation should ideally be technologically neutral.
Yes.
But in this area, you know, if we were to ask you, which areas should then be regulated now as quickly as possible to prevent exactly these abuses to become too widespread in the market?
So again, the question of intermediate, now it's very difficult, and just to play a little bit of kudos to the European Commission, they always get bashed. I can tell you...
They love it, by the way.
Yeah, I'm not. Yeah, you have to be a masochist maybe to go there. But Margrethe Vestager has done an outstanding job. We participated last year in a conference on a fair competition in the platform economy. So the thinking is very much advanced. One of the last Nobel Prize winner, who's from the University of Toulouse, a Frenchman, has already laid out what needs to be done. We need to change regulation. Andrea said it very clearly. Most of our or conduct regulation and competition regulation comes from the 60s and 70s that do not affect and reflect platform economics. So they need to be adapted. They also need to be adapted to the world of global regulation. I have to criticize Margrethe for example, for the Alstom thing. It doesn't matter what the competition in Europe is, it matters what the competition globally is. So we need to really update anti-competition laws. Or let me take Amazon. You know, they're very clever because they say, I have only 5% of the detergent market. I have only 5% of this, but they have 50% of your relevant information set for making purchasing decisions. So focusing on products that we buy and market share dominance is completely irrelevant as a question economically. Yeah. They dominate the way you make purchasing decisions on anything. And that is what we need to look at. Yeah? So we have a problem that regulation has to catch up much faster with the realities. It's very funny when the founders of Facebook or Google or come to Europe, there's 3 business people and there are 50 lawyers. Mm-hmm. And they are 50 lawyers for a reason, yeah? Because they know that we'll catch them. They're trying to just procrastinate as much as we can. Yeah, that we get to that. So we need to get quicker, and then we are not afraid of competition. Yeah, may the best win. So this is not about, I just want to be very clear, that we don't want competition. We just want it to be fair.
Yes, yes. I think that message should be passed on very clearly to the politicians because the question of whether there should be regulation at a time of change, because when you regulate too soon, maybe you take the wrong regulation. So it's a question of deciding which way to regulate.
Maybe one thing as an economist, that and so I hope it doesn't sound too theoretical, we don't need to go to the GAFAs and the FANGs and all of that. We can start with intermediation issues today. Let's take the United Kingdom. When politicians ask me always, what does a good industry outcome look like? I always say, okay, ask customer satisfaction. So the first question is, how happy are consumers with what our industry does? This is the first. And it's our responsibility to dramatically improve that. The second one is, say, an economic outcome is, for the same car, let's take car insurance, what are you paying as premium, and what is the net payout to the consumer? What is the net payout to the consumer? Unfortunately, if you correlate that to regulatory intensity, it's one of the highest in the United Kingdom, the payouts are the lowest. So I'm not saying regulators are bad. I'm just saying, regulatory intensity is not usually a good question for whether you get a good outcome for the consumer. Remember, mandatory renewal, everybody goes, you have 40% of the market churning, and everybody pays for that. Yeah. So the net, when you take 100%, 100 pounds is premium, what is the net payout? In the UK is one of the lowest in Europe because you have the highest level of intermediation on anything, including settling claims. So the second thing you should ask as a politician that wants fair competition, how do you increase net benefits to consumers? It's not so complicated.
Okay, yeah. So politicians should be thinking more like consumers themselves.
That is a great way to put it.
Yes, yes, good. Well, let's continue now a little bit about the role of insurance in the future. With these technological changes, the data availability, would you agree with a statement that would say that insurers in the future are going to work more on prevention? It's going to be, the insurer is my friend, he or she knows what I need and will take care of me, rather than the company that interferes to pay out my damages?
Yeah, it's not just prevention. I think the whole question around services, just to rephrase it, will play a much bigger role in the future and information provision than it has in the past. Yeah, really dealing with damages is just too little.
Yeah. Can you give some examples?
Yeah, and it underestimates our ability to reflect outcomes. We have very obvious ones, just getting really better advice. But I'll take one thing in car insurance that we are doing already, and it's going to come. It's very interesting to find out that the automotive companies do not have any control, in difference to what I thought, on the distribution of their cars really. So when you ask the CEO of the big brands and says, can you really ensure proper service in your dealerships for damaged cars? The answer is yes, but the fact is no. And there's many, many reasons. In some countries, they can't even control the distribution of their cars. They can't, by law, regulation doesn't allow them to have their own branches. So when you go to, and you have an accident and you ask, so number one, who takes care of the fact that I need quickly get access to a good garage? Then you would say that's obvious with what we do today. It is not obvious. Second, do we know that the car is getting technically proper repair? I.e., is the car after the repair in the same shape, adjusted for the accident than it was before? Maybe not losing a lot of residual value? Nobody knows. 3, is the cost of the repair economically fair? Nobody knows. So when you think about cost of ownership, again, thinking like a consumer, You have no idea. And we know today that in Europe, the car manufacturers don't make money with selling cars. They make all the money with after sales, which means that inflation for spare parts has been going up 3-4 times real inflation.
And consumers believe there's some conspiracy with the insurers here.
I don't know. I haven't thought about that even. Yeah? But so think about what we do in the future. There is an accident, and we give a guarantee to say, we'll get you proper repair fast. You will love the experience. We'll make sure the technical quality of the repair is outstanding. So if you are a leasing company that actually owns the car or a consumer, Allianz makes sure that the value doesn't decrease. And we'll give customer feedback to the OEMs because they never really get it. We'll have the data, not Audatex or somebody else.
Will a bot do all these things?
No.
No. Will there be a human face somewhere?
Technology will help us to do that. I think the key thing, how we think about technology, it's an enabler. Now, if you want to talk to a bot, why not, if that's fast? And you know, I'll tell you a funny experience I had in the early 90s. I was living in the university with other people, and it says, why do you always call this voice response computer? And my other fellow student says, because I don't want to talk to a human. I say, why don't you want to talk to a human? Because my account is in deficit. I don't want to be told that I am in overdraft by a human being. I'd rather want to be told by a computer. So, kidding aside, there are services where you're very happy to get an electronic response. But we are always contrasting these pictures around. There's robots and everybody will be treated by robots. I think that's wrong. Technology should help us to make better decisions and support us in things where we can gain productivity. And in our industry, the productivity gains that are possible are gigantic.
Fantastic, fantastic. Well, let me go then a little bit on a different topic, and that's it was mentioned also by Andreas, this long-term vision of the insurance industry. I noticed that long-term guarantees are being cut down by many insurers. They move on to unit-linked business. If there are not going to be long-term liabilities, there will be no long-term investments. Do you believe that the industry has not too much a short-term view in the way it operates?
We don't believe the future is in purely unit-linked. We actually believe the future is in very carefully managed longer-term guarantees, but they have to be economically produced. In a world where we have financial suppression, like a repression that we have in Germany today, just be very clear, there is no reason for interest rates being negative in Germany, other it's in the interest of the state and the politicians. There's no economic reason. You know, whatever Mr. Draghi says, it's just not true.
Well, the state is us. The state is us.
Well, the state is not us, because we don't have the same interest as people that have a lot of debt. The issue is we're trying to get out of debt by reducing the cost of debt. In the history of mankind, it has never worked.
I thought it was just done for the bankers to keep the interest rates low.
No, the banks in the long term also do not benefit from that. They benefit from certain spread, particularly the South, from smaller spreads, but that only works if you get rid of the debt. You see that in the case of Italy, the spreads are back to 280 basis points. So that hasn't really helped. Now, the issue is we have financial repression, which is everybody that is in debt, that's typically states and rich people, have a benefit, and the poor people that do not have access to loans. So it's the most unfair treatment of, by the way, poor people that we can have. So all the narrative, we're doing it for the poor and social service we can offer, it's just baloney, sorry.
Yes.
So just to get the facts right, in this environment, you cannot offer guarantees that require a positive return. So it's not because the industry doesn't want to do it. In financial repression, it's very difficult to do it. Now, it's not impossible, as long as you have cash flow matching assets. The key change, and I, by the way, wanted to take the opportunity to thank you for your life's work on Solvency II. We always criticize it. But the one thing you've done really well, and I would really like to respect Carl, is giving decade-long interest rate guarantees that you cannot cash flow match is a crime. And you've helped to overcome that crime and take the risk out of this industry, so I thank you for that.
Thank you, sir.
No, I really mean it. No, I really mean it, because it shouldn't happen. Now, where we have assets to match the long-term liabilities that we want to give, because that's our value proposition. Our value proposition is not to sell expensively wrapped funds. That is not the future. We need to add more value, and that is risk transfer. So we need to do that, but it has to be cash flow matched, for which we do need the assets, and we do need economic returns for that. So that's why Allianz, for example, on its 800 billion insurance reserves, moved basically from 40 billion alternative assets to 140 billion in 5 years. Because we can afford as an industry to pocket the illiquidity reserves if we manage that carefully and share that with the policyholder. Yeah. That is what we have to do in these times, and it's not going, putting ever more money into the equity markets. Yes.
Well, it's good to see that you have this long-term vision about the need for guarantees, and I think honestly the way things are moving, that people put the risks on private individuals, I think it's a little bit unfair because many people cannot manage that. But can you give some examples?
But it's a regulation again. Yes. I went to university in the United States. And in 1986 and 1987, they started with the so-called ERISA program, took the tax benefits away and moved them to unit-linked and funds, because the argument was you get a much better return if you only invest in equities over time. Yeah. The unfortunate thing, as a former trader, I can say that over 30 years, it was 40 trading days that determined all the positive outcomes for the equity markets, 40 days. If you were not invested during those 40 days, you didn't get the returns. So we're one of the biggest asset managers. You need both. You need the accumulation, but you do need the capital protection. And the poorer you are, the more protection you need. You can help educate politicians to say taking the guarantees out is something that is only beneficial to the provider of the pensions, is not beneficial to the consumer.
Yeah. I think it's a very important message you're passing here. But I would like to hear from you in this debate about sustainability. There is this call for advice that the Commission has launched to the European supervisory authorities to identify issues where the industry may be too short-term, may be caused by regulation, but maybe also other things that are not caused by regulation. But how can the insurance industry help to overcome this short-termism, which clearly is not in the interest of sustainability?
Yeah, that's a very difficult one. It's a very difficult. First, and go back to what Andreas said, we are one of the most important groups of investors in the world. As asset owners, or at least representative asset fiduciaries for our policyholders, we have an influence who we give money to in the asset management world. Unlike Allianz, many of us give the money to third parties. And when we give the mandates, we have both the right and the obligation to steer the mandates. And if the mandate is only give me X return and I don't care how you do it, we shouldn't be surprised that people make their money with speculation. So start with that. And again, regulation can help us with that. Because, in difference, I get a lot of letters from very interesting American people who says you need to improve this and you need to improve that. And I always write back, are you applying the same rules to yourself, by the way? And I never get an answer. Yes. Small detail, right? So let's call the bluff. But the second thing is we do have an ability to put sustainability criteria into our investments, and that would drive asset management behavior differently. Yeah, whether that is very important. But I want to go back to the point that you made. The way we set accounting rules the last 25 years has been driving ever more short-term orientation. Because with the so-called market-to-market accounting, which, by the way, for solvency is very important and we should do, there is a differentiation what you move through equity and solvency capital versus what you move through earnings. And the more we have investment bankers, paying accounting regulators to drive us into derivatives because they want the volatility in the earnings, so we need to spend the money on hedging it with derivatives, the more you will get people out of volatile assets. And drive volatility. And I think we need to understand half of the investment banking industry was paid on volatility. So you don't care whether prices go up or down. You don't care, as long as they move. So if all the smartest people in the world are paid for creating volatility, guess what happens?
Well, yes. Indeed, but what
so we need to think a little bit more deeply and then say, how do we set accounting rules? How do we set capital rules? So that was always said, the equity question now with the IFRS, move the volatility through OCI, i.e. through equity, sorry for getting capital. Show it in the capital requirements, but don't move it through the earnings. But allow us to sort of think through how you do that without creating artificial earnings. The worst part is what I call profit as inception. where you say, I have an economic profit that is accumulated on 20 years and I show it on day one. By the way, then I get a bonus on that. If the money doesn't come, I get fired, great, but I've accumulated 5 years of super stock options and then I go home. And the loss is with the shareholder and the profit is with me. It's called Wall Street.
Yes, well, yes.
Yeah, but guys, let's get a little smarter here.
But this is true. You know, this is what many people have been saying. I've been saying also, the basis of everything is accounting.
Yeah. So you asked a question. I'm happy to give. The problem is, how do we get from this conversation to impact?
Yes, exactly.
Yeah, and
yes.
I think this industry needs to really work together. Andrea said it too. If we have a cacophony of different opinion, and we'll hardly get hurt, because the bankers have a lot more money than us for lobbying. So we need to really spend more time. Yeah.
Are you sure about that?
Oh, much more.
Okay. Yes,
I can show you the numbers.
Well,
and you see it in the Brussels restaurants, by the way.
Well, I can tell you that I had a commissioner who once said that he always thought that the bankers were the biggest lobbyists, but he learned that insurance is equally.
Really?
Yes, he did say that. I won't tell you which commissioner it was, but
no,
let's go to.
I tell you because you probably get 20 different meetings with insurers. So that's why I thought, because there are so many of you, and that's exactly,
yes.
I think, the point. Why don't we have 2? And we spend our time making sure that we give clear messages.
And you know why we needed 20 minutes?
No.
20 meetings. Because the insurers were also always too complicated. So you need a second meeting to understand.
There you go.
What
We
they
go
said
back
in the
to the
first
beginning.
meeting. Yes, that's one. But let's move on a little bit to the human resources side of the business. And with all these technological changes, and I was, 142,000 people. How are you building this company for the future with all these changes? How do you manage to get your staff to follow that approach? And as a leaders, your managers, what are the sort of characteristics that you would see the ideal staff, the ideal managers in an insurance company for the future?
For me, that's the most challenging, also personally most challenging piece. If I just signed up for another 6 years in Allianz, and I have to tell you, after the first 11, where I have personally to do much better is on the point of humanity, right? So when I started, we had 2 big problems. I would call it the heart attack and the cancer problem. The heart attack problem was called PIMCO. We have one of the largest investment managers in the world, and they were losing, because of the departure of the founder, about $10 billion a week at the time. So I said, if that continues, I'm out of a job at some point, because they accumulatively lost $350 billion in flows. Now, that was 2015. 2017, 2 years later, we had 170 billion inflows, the strongest year of inflows since the inception of the firm, right? So we've been very good in addressing that. We brought in completely new leadership. The second, the cancer problem, was life insurance. The thing that we've discussed earlier. We have fundamentally changed not just the new business, but also worked on the back book of Allianz, and I think now we have one of the best balance sheets in the industry. But it took 5 years of very hard work. Through that time, I was so focused on making sure we become resilient that you become very edgy, and you become very, very determined. And then we have an organization that is very consensual driven, very decentralized. And people were a little bit, not so happy about the leadership style. I still defend it as absolutely necessary, but that is a self-defense. Going forward, I think it is very important to spend more time with our people, to explain to them that we are not driving change just to increase dividend per share, but we need to really tighten the ropes and make the ship ready for the next storm that is around the corner. And then people say, yeah, but what the heck, you have now 90 billion market cap, you're by far the biggest, you beat all the competition, what are you worried about? We're great. And they just don't understand that it's not anymore the stable carpet that we're standing on. Quite a few people are trying to taking away. And the real issue we have is the average age is increasing in the company. It's now 47 years. So a lot of people think about, I just have to make it for the next 10 years, and then, whatever happened after me, as long as my pension is fine. So I'm looking at the rating.
It won't be fine. It won't be fine.
Yeah, but it won't be fine for somebody else.
Yeah, well, it probably is.
Yeah, so getting that thing right is going to be a key challenge, and for that we actually need different people too.
Yeah.
It's also a very difficult message. It's part of retraining, and we need to spend a lot of time and energy on retraining people, bringing them new skills. Yes. The first one is actually understanding what do our consumers really want and need, and how they want it. rather than what the intermediaries tell us that what they want, which is typically how we've been thinking the last 129 years.
Yes.
And then the second one is learning technology. By the way, not just learning how technology works, but what the economics of technology look like. It doesn't help you that you understand what HMTL means. It also needs to know, when you buy technology, how does it affect your business model, and how does it affect the economics of the business model?
Yes. Isn't that also an aspect of sustainability, is the way we deal with people? Isn't it so that today we ask too much sometimes of the staff? And
do we ask too much of the staff? Well, we're asking a lot relative to the past, it's true. And I don't want to be a cynic, but I think
you're too young for that, by the way.
Yeah, but it's also very comfortable in our industry. We have been attracting people that did come to us because we are a stable industry, right? So we had, and I don't mean it in a negative way, a little bit of adverse selection when it gets to agility, yeah? Because when you're really agile, would you want to work in insurance, historically? Maybe in distribution and customer interface. So we need to deal with the fact of who we have, and we have great people in our industry. But we really need to teach the elephant to dance, and that's not so easy.
No, but the fact is also that particularly in the age group between 20 and 30, we see a lot of young people having burnouts, in financial sector, industry. Do you also have that problem?
No.
No? So everybody's happy at Allianz?
No, I wouldn't say that. But again, so the number one thing, the first thing that people ask for, what they're missing, is actually why are we doing all of this?
Exactly.
Yeah, we call that purpose or mission.
Yes.
But it's really funny that after 129 years, we spend a lot of time the last 2 years of what are we actually trying to achieve? And we spend a lot of time with thousands of employees around what is that? And we have something very simple. We call that now We Secure Your Future, which is, by the way, your future, not our future. Because we were very much internally focused, very proud of ourselves, but it was always Allianz, 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 and the purpose is we serve somebody else. So your job, and the answer to your question is, and I ask every employee, write it down, what are you doing to secure the future of our clients?
Yes.
Whether you're in compliance or legal, if you cannot answer the question, better answer it. So get outward orientation consistent with what we said earlier. So the people are looking for meaning, particularly the young ones.
Yes,
and the second one, they're sick and tired of nonsense. We just talked about the fact that we are very complicated. Complexity creates lots of errors, and a lot of futile activity. So people don't want to do stupid things, even if they get paid well. Right? It's not just, I'm making 50,000, I have a great job, but I'm doing nonsense. I'm finding out after 6 months, I'm just correcting errors that shouldn't happen in the first place. That creates burnout. And then the third one, are we overstretching them because we're asking them to manage a very complex legacy and building the future? Help me understand as a person how that works. Yeah, so I really have an issue. And then we have to be a little bit fair. It's very comfortable. I always think about my kids. They always criticize. They always say, I have the right to do this. And I always say, do you also have an obligation? How about a year of social service? How about learning something before you're bossing other people around? Yes. So we have also in some of the more fat society a little bit of an attitude issue, but I don't want to have that on first page.
No, you bring us back.
Now, when we hire people from Romania, just to give you an example, we bring them to Munich, they say, this is paradise. Yes. And when you ask locals, says, I'm entitled to this. And I think we need to think a little bit about what does this entitlement really mean.
No. It brings us back to accounting. The balance sheet does not only have assets but also liabilities. That's very important. Now, to finalize, and then I'll go to some of the questions from the audience, is the ideal insurer for the future. How would you see that? Which is the insurer that you believe at this stage will survive all the challenges that we have talked about?
It's called Allianz, of course.
Yes.
No, but kidding aside, some self-confidence, but let's not have hubris dominate the debate.
No.
Again, I think the key question is going back to the question for our communities. If the people say, we love this company because it does a great service and we are happy with what it does, the likelihood that we do well is the highest.
I think that's a very good summary, and we will not go further into the details here. I have a question here about insurance gaps, cyber, nat cat pensions. What do you think should be done to address these gaps?
So it was nat cat, pensions, cyber.
Let's
start with cyber.
Yes,
And
that's
I don't know how
one. Yes.
There's a difference in my mind whether we protect the consumer, the end consumer, or we protect large businesses. My personal opinion is very difficult to insure, if not impossible, large corporates, because we do not know how to price the risk. Because we don't know the risk. And what we're doing at the moment is gambling. Now, we often do that when we don't know an industry and then we find out over time. It's a pretty dangerous gamble because of the agglomeration risk that was described earlier.
Yes.
And you already see that today. A lot of cyber risk is in business interruption coverages already entailed. So we have had that risk for a long time. And when you look at the medium to large side risks frequency over the last few years, it has gone up massively because we did not understand properly the value chains. And we haven't done a great job as an industry, including the brokers, to really model these business chain risks. And then you will see that very soon with the China-US conflict. As supply chains get rearranged, there will be a lot of disruption and a lot of claims coming. So I think we really need to study the interdependencies more. Cyber is just an amplifier because you move from physical flows to virtual flows, so they happen instantly, and they're more difficult to model because we do not know the connections. Yeah. So the point of Andreas on having the problem is with we need the data history. This is how we do tariffs. Yes. It's unfortunately not working. So classical actuarial science, why does it work? Not work. 90% of the data we have in this moment was created the last 2 years. So if you say, I need 10 years of data, unfortunately, it's completely irrelevant because most of the data that matters is created as we speak. So we also need totally different pricing mechanisms for these things, and we're just at the beginning. Now, I don't want to be gloomy. It's a huge opportunity, but the way we do it today, in my opinion, doesn't work. It's totally different from protecting the consumer. We can do a much better job to think about how do we protect our mobile phones? How do we restore the data? How do we ring-fence that? Because that's an SMEs, it's much easier to do than to do it for a large international conglomerate. So we're actually also, I think, as an industry, completely working on the wrong thing. So my prediction is we need for the industry self-insurance solutions that need to be intelligently structured and get the data in a way that we start to price them over the next decade. But we can do a lot to protect the consumers and the small businesses. And we have a big gap there.
Do you think that an insurance company should have insurance against cyber risk?
We do have that.
Yeah, you do have it, but you may not be the...
I don't want to give recommendations for other people, that's what I'm trying to say.
No, but the reason I'm asked that question is, of course, that it's a question of designing a new product and knowing how to operate with that. But regulation can help you by requiring that insurance so that you have the larger pool.
Yeah, but Carl, then you need to know how to price things. If you say, you need to have it, but you don't know what to do, then we end up with what we do on nuclear. We have these pools. Maybe that's the answer. Yeah. Maybe that is the answer, but we need to know how to price it. Yes, and at the moment, I think we're dancers in the dark, I think is this song from the 80s.
And you have the famous question...
No, we were on pension and NetCat.
Yes, I think we should go on pensions.
NetCat we can do very quickly. NetCat we can do is very well known. It's very well modeled. It's very well documented. And we still lose our shirts. Why? Why? Because human beings, because we're optimists, we do not price tail risks. So I have a debate with our actuaries around, can this happen once in 250 years, one in 2,000 years, and whatever? And I say, I don't care. I want to know what the limit is, and I don't want to lose more than X. And then they say, yeah, but if you do that, we don't get the right price for the risk. And said, that's exactly what I'm trying to say. Give it to somebody who is stupid enough to take it at this price. Yes. And there is plenty of capital that is ready to take NetCat risk as a lower price. Now, because we are steered by the capital markets on absolute earnings, people are ready to gamble. People are ready to gamble. So the key thing we have done, and when you think about 16 and 17, we had dramatically less NetCat than anybody else, is because we decided we do not give absolute earnings targets for these people. It's really return on the risk that you expose, and it's not one standard deviation value at risk nonsense. It is how much can I lose and do I like the trade? Do I like the trade? Yeah, and having been a trader, you get a little bit of a different view. But we do really misprice. Now, why do I say that? It's a big problem because if capital suddenly disappears, we may end up with capital shortages. So if I was a regulator, I would not like it. And the first thing I would ask for is create an IBNR for NetCat exposure. Do not allow this industry, as we do it today, based on current cash flows. So we know European windstorm is the biggest risk for us in Europe, require the buildup of an IBNR. And then you get totally different pricing and much better discipline.
Okay. And pensions.
Pensions.
That was the third one.
How much time do we have?
No, you're still so young, so it's not a problem for you at this
That's
stage,
very nice to
yes,
say. It's the makeup. We have no makeup here.
Yeah, not yet.
The issue is almost unresolvable from a policy standpoint, because the people that have to put in different rules have zero incentive to do so. Yeah. This is unfortunate. The enlightened politician is a little bit of an oxymoron these days. So the question is, what do we do? Because we have been promising benefits to consumers that we know we can't get. So the German pension benefit per annum is now a third of the public budget, 100 billion euros, right? So they call that the input to the pension fund, which means the public pension system is bust unless we get 100 billion taxes in. And it only works because Germany comes out of 15 years of massive economic boom, right? We have full employment and so on. And by the way, artificially depressed interest rates, so debt service is artificially low.
And supplementary
and all kinds of stuff. So the issue is, if you do not find a solution that people stop promising stuff that they cannot prove they can honor, it starts with accounting. You have to fund pension obligations. You cannot offer something that says the taxpayer is going to fund that. Unfortunately, I believe we will not get out of this trap without a lot of pain. Now, we can, I think the best way to do that is, the most efficient way is through workplace marketing, because it has dramatically lower distribution cost. So the German betriebliche Altersvorsorge, I think, is one of the best systems in the world. Whether it's fund-based or insurance-based, it doesn't matter, but it's the most efficient way to deal with that. However, we have an ever larger share of people that are in changing employment, so it cannot be something for large companies. We need to find a solution for SMEs too.
Yes, yes. So,
so we're working on it. We need to educate people, but unfortunately, I think the incentives are rigged against the poor people.
Yeah, yeah. Let's maybe have a last question, and then we'll stop for the coffee break. There is a question that, let's just see. I won't ask you that question.
Come on.
No.
Give me that.
No, I think a very good question was about the simplicity of the products and all the complexity of GDPR and things like that. Is it still possible to produce an insurance product that is simple? With all the environmental...
it gets more and more difficult, but I think we should not use regulation as an excuse. I gave you the example of 26 to 11, and we can probably go to 5. Yeah, it's not going to be 2 like in Italy, but there is dramatic simplification possible, even in this case that I said, on the documentation. So, and I'll close with an example. I was buying from a Canadian hi-fi company called Bose. You may know them. So earplugs.
Yes.
And they have an extended warranty insurance with this product. And it's very funny, because when you unpack it, it has 2 pieces. It has, a small leaflet with fine print where at least I need different glasses. And then there's a page on front from Bose and says, "Dear customer, we have insurance for your product. Because it's so complicated, we just tell you what is in this leaflet." And it says, "Here are the 5 things that when they happen to your policy, to your product, we will pay for. And by the way, here are the 5 things we will not pay for. Your Bose company, and by the way, if you're interested in the detail, read the leaflet, but I wouldn't do it."
Yes, okay.
They didn't say I wouldn't do it, but this is what it basically says. So we have a lot that we can do.
Okay. Ladies and gentlemen, I think you all agree with me that when I qualified Oliver as a man for all season, I would say he's also a man for answers to any question that you're being asked, sir. I think that you stressed a number of very important things. First of all, that we have a lot of challenges, but there are solutions. And I think you proved the point that you're an optimist. You stressed the role of accounting. And this is dear to my heart, because a lot of problems are related back to that. But you also, and I think that's very important for you, I think that you also expressed the importance of the human aspect in everything. I think is very, very, very important. Ladies and gentlemen, join me in thanking Oliver for his excellent contribution.
Thank you very much. Thank you. Thank you.
Yeah.
Thank you. Thank you very much. Thank you.